Lal Street. Shares of Avenue Supermarts, the retail chain D-Mart for those living in Maharashtra, that's a known name, had a dream debut today on the bourses as its shares surged over 100% on listing on the Bombay Stock Exchange, a first by any retailer.
Well, the appetite for D-Mart was so solid and it was so resurgent that D-Mart today now commands a market cap of more than 40,000 crore. That's twice the market of, or thrice the market cap of its biggest rival, Future Retail.
And so we'll tell our viewers with voices lined up on the show what to make of this big bang listing and where does the retail story with D-Mart go forward from here. We have a power-packed lineup of guests: Dharmesh Mehta, Axis Capital; S. Ramesh, CEO, Kotak Investment Banking; Ayaz Motiwala, Senior Fund Manager, Nivelis Partners; and Varun Javeliath, MD and Portfolio Manager, Equity Intelligence India. All of them join us to give you the best perspective on this issue.
But what has D-Mart actually managed to achieve? Now, we all know the listing price, the fact that it has been promoted by Radhakishan Damani and his family. An ace investor becomes an entrepreneur and he manages to achieve the impossible. And impossible is a word, because in terms of market cap or pecking order, D-Mart is now amongst one of the most valuable company in India. So Darshan, Yatin and Ajay, all of them are standing by, and they would be telling us about the valuation, about the market cap and other nuances of today's grand listing. But first, let's go to actually Karunya from a research desk, and she would tell us, in terms of valuations and why would D-Mart qualify as the very best in a long time.
Absolutely, and on the first day the company has scored a century. It opened at a premium of over 100%. It as against the issue price, which was based at 299 rupees. The stock saw an opening at 604.4 rupees. In fact, when it closed, it was at the day's high at 641.6 rupees, indicating a premium of 114% odd. In terms of valuation, the company has crossed the market cap of 40,000 crore rupees, and not only has it surpassed its competitors like Future you had mentioned, but also biggies like Idea, PNB, Marico and Bank of Baroda. And yeah, coming back to the valuations, analysts expect the FY18 profits to be somewhere between 700 to 750 crore, and it's trading and it expected to trade at 50 to 56 times PE FY19 based on the FY19 earnings estimates.
Right. Karanya, thanks for that. And the important aspect is that the bumper listing also meant that the market cap of Avenue Supermarts crossed 40,000 crore rupees, making it more valuable than a lot of old age companies listed on the bourses. Darshan Mehta joins us to tell us more about that story and really put context to it on how D-Mart on its very first day managed to make an impression. Darshan?
An issue which came at 20,000 crores is now worth almost 40,000 crores in a matter of just 1 day of listing. So on an intraday basis, D-Mart's valuation or market cap has crossed the 40,000 crore mark. It's one of the biggest stocks and story as far as India is concerned. And on the first day itself, it's found its way into the top 70 valuable companies of India. And among, if you take a look at the market cap of some of the nifty companies, the market cap of D-Mart today is much higher than 4 nifty companies. So companies like there is Bank of Baroda, there is Idea, there is Tata Power and ACC. So the market cap of these 4 companies is much lower than D-Mart at this point of time. Some of the other notable companies wherein D-Mart has actually overtaken as far as market cap is concerned include companies like Marico, UPL, Bharat Electronics, Sun TV, PNB, ACC. So a big bang listing, and the market cap clearly soaring over the 40,000 crore mark, and there seems to be no stopping as far as the price is concerned, because that seems to be moving higher. So every day that the market moves higher, the price moves higher for D-Mart, the market cap is likely to increase for the company.
But what makes the IPO so special is the promoter who has taken the business to unmatched heights. The listing of Avenue Supermarts props up Radhakishan Damani's net worth to nearly $6 billion. Here's a look at the profile of the owner and the promoter of DMart, Radhakishan Damani. Mota joins us for a quick take on the man behind the D-Mart IPO, Radhakishan Damani. Well, he couldn't have asked for more.
Most of us have known Radhakishan Damani as one of the successful investors on Dalal Street, and if you look at his investment records, he has been a consistent performer. Rakesh Jhunjhunwala considers him as a stock market guru and a mentor, but Radhakishan Damani since 2000 has built a superb business called D-Mart, which is almost 40,000 crores in market capitalization post the issue listing. Of course, the issue price was 299 and the stock ended up gaining 115% odd on an intraday basis. So that is the kind of investor interest which was there in D-Mart. But if you look at Radhakishan Damani, apart from being a majority shareholder in D-Mart, he has significant interest in companies like 3M India, various companies like VST Industries, United Breweries, India Cements, Delta Corp. All of these stocks wherein Radhakishan Damani has made investments which are quite successful. He has over 5% stake in Blue Dart, which is a logistics company. In terms of value chain, a lot of things to learn from him as an investor. But post today, D-Mart is something which has created a lot of value for him. So rather than being identified as an investor, people now look upon him as a retail czar, as a person who has promoted a very successful business in terms of profitability, in terms of return ratios, having 2 years of road shows, works in the IPO. Finally, we have seen a very strong listing. Of course, he has 2 decades of experience in the investing market, but since 2000, D-Mart is something which has created immense value for a person like Radhakishan Damani, and most of the investors now look upon building businesses and creating wealth for the stakeholders and investors.
Thanks, Yatin, for that. It is noteworthy to mention that the other recent listings that make headlines or have made headlines in the recent past, if you compare this moment to their listing pops or their first day on the bourses, that will kind of put context on why this listing becomes even more special. Ajay joins us to bring us that comparison.
Tanveer, that's correct. If one were to look at the comparison, the recent successful IPO actually pale in comparison. I wouldn't shy away from saying that. 115% net gain for the IPO investor on day one has not really happened in a very long time. Look at how Sheela Foam gave 41%, 37% from Endurance. But remember, they were half or 1/4 of the money which these guys, Avenue Supermarket, has actually raised, around 1900 crore. They were 500 crore and 1150 crore. But still, 120 crore, 120% is not been made in the recent times if you compare to any last 8 or 10 IPOs. So this has clearly beat the expectations of most HNIs and retail investors who participated in this particular IPO.
Anunjo Lad joins us, Managing Director and Portfolio Manager with Equity Intelligence. And Anunjo, no takeaway from the fact that this is a day which, as students of financial history, we would like to remember very fondly. India's finest investor has now taken a fine business public, and for the first time now, Indians can publicly participate in D-Mart. But for those who have aspirations to bet on his dream, the challenge is that you're getting the stock at a P multiple of 100, and you understand the importance of value investing more than anyone else.
Yes, Nikunj, it's a very important development in the market, Indian market. It's a case study, basically. It's a futuristic business. It's a premium company, and it's a super premium promoter. Everything together in a simple business. That creates the premium valuation also. But this company has long way to go in its business model. It maybe it's the last 10-20 years. It was a different phase altogether. Now it will be going into a very different league. Companies capable of raising resources, the funds, and grow much faster, manifold faster So that is why people are willing to pay a premium, a super premium, 100 PE. Maybe the company is now at around 11,000 crores kind of a revenue company today for the current year. Maybe 400, 500 crores kind of a net profit. Everybody is wondering how can it be valued at 40,000 crores? So that is the magic of equity. The wealth creators. It's a very unique wealth creation happening. Mr. Damani is a unique wealth creator. He's the fantastic market person. He knows the pulse of the market, and that's an amazing kind of mix of very important elements in one single company. So investors are going to be thrilled and excited about it, and that's what is reflecting in the stock price, the 100 PE, and all those aspects.
No, that indeed is the case, Puranjo. And, I just want to keep it with that graphic plate on our screens before I take up my next question. Look at the peer comparison on inventory days and creditor days. That just talks about the efficiency in running this business and how that can help as a strong differentiator to peers in the industry. Spencer's, Future Retail, inventory days, essentially the days it takes to stock the inventory before it clears out, and that just reflects that DMart has the most condensed cycle when it comes to pushing inventory out from its warehouses. Creditor days is the repayment cycle of, and again, this is essentially talking about short-term cash repayments as well as working capital requirements being managed, and there is high efficiency there. They beat the market by a big margin, 8 days compared to, well, the numbers say it all.
See, whichever matrix you look at it, I mean, DMart is cut above the rest. So there is no point in debating whether they are a great company or not. They are. DMart has got created when the world discovered e-commerce. DMart has got created at a time when the Birlas and the Reliances of the world, they were trying to put complex logistics into place to manage even simple businesses like grocery business. The point we debate now is that at a P multiple of 100, what is there for the minority shareholder? If you buy now, when do you make money? And if you don't buy now, are you missing on what could be an avenue to participate in one of the biggest companies? So my sense is that you could wait for bad days to buy the company, because retail business is a simple business to understand. It's not a new business. It's a business which has a benchmark in which how you value the businesses both locally and globally. It's a business which will not be giving you growth rate like IT companies or pharma company gave you a couple of years ago. So this is a business which will grow at about 25 to 30%. But for that kind of a business, do you pay a premium which is north of 100 times? That's where my reservations are. Today there's euphoria, there is a bit of a buying panic, the free float is very limited, 10% has got diluted, a lot of that is still lying with anchor investors which is locked in for 1 year. So the free float I think is not even more than 5 or 6%. On that kind of a free float, obviously all kind of give and take and price bids would happen. But that's my sense on DMart. Great company, great business, premium promoter, simple business, organized very well, but price is where my reservations are. Wait for a bad day, let the fraud settle down. You don't want to be chasing stocks. You want to be a buyer when you have reasonable amount of margin of safety. Now, Arvind Singhal of KSA Technopack has been able to crack the code on why DMart has been a success story. So Arvind, what is your sense? I mean, what are they doing so special which others are not able to crack? The Birlas and the Tatas and the Reliances of the world are still struggling.
See, firstly, I think it should reassure the people who are still struggling in the retail space in the country that it is not something which is impossible to crack in India's context. We need some successful role models, and I think DMart is certainly one of those which can provide a lot of learning to the people who are still struggling. I mean, you just talked about Aditya Retail. Even Tata Tesco hasn't really made that much of an impact there. Reliance has done very well in some formats. It is not doing so well in some others. And I personally feel, therefore, that as far as especially the value supermarket stroke small format hypermarket is concerned, it's a very good format for India. And we should see a lot of other players sort of adapting their businesses to even more closely follow what DMart has been able to do so successfully. I also anticipate some consolidation, by the way. So within next 12 to 18 months time, I wouldn't be surprised if we see some of the larger names, I don't want to speculate on any one of them, may want to merge or exit in favor of D-Mart.
Right. B.S. Nagesh, who's founder Terrain, which is Trust for Retailers and Retail Associates of India, also joins in with his perspective. And Nagesh, what's most important is what this does for the sector as a whole. We've been saying this, I mean, D-Mart is seeming to be for retail what Indigo has been for aviation. The Indian retail sector seems to have been, re-rated, so to speak, with this bumper listing coming through. Maybe the perception has not changed completely, but it could definitely give a facelift to the sector.
Well, I think the story continues as it was envisaged 20 years back, which is all about consumption. I think the only difference that has happened is that the environment is becoming slowly more conducive towards consumption and facilitating modern retail to perform well. So I think there are 3 or 4 or 5 incidents that have happened, or actions taken by the government, or actions in the market which has changed. One, I think, is that the whole e-commerce market, which actually came up in the last 2 years with discounting and with cash burning, seems to have got into senses, and suddenly things are looking more level and grounded. That's one. So people, as customers, one realizes the reality of shopping online, offline, or omni-channel. The second is that all said and done, one by one, the government has opened FDI. Maybe it has not opened FDI in the multi-brand sector, but a lot of FDI has got opened up, whether it is single brand or whether it is multi-brand with restrictions. And therefore, that door opening itself is making a difference. If you look at it, Zara, H&M, Forever 21, I think one by one the brands are coming in. That's the second change. The third that has happened is that the GST is going to be a big game changer for the retail industry. For a country like ours, I think we need to get a national movement of goods, services, taxes. I think that is something that will happen in a very positive way. Also, from a retail industry, because of the MRP regime, as an industry, one could not take the set-off of service tax on rentals, whereas with the GST, the industry will be able to take a set-off on the service tax on rentals. So most retailers are likely to make a few percentage points or a few basis points gain in their P&L. On top of that, post the demonetization, I think suddenly you see that the use of digital payments have gone up. You also see that customers are moving from unorganized to organized. So the whole platform is becoming modern and organized retail, and therefore the organized retail players are seeing benefit. So I would say the ecosystem has become very good, and they say Sone pe Suhaga, and today.
Okay, now Panunjya, my next question is coming your way. What is a good price to buy D-Mart?
Yeah, it's a very difficult question, Nikunj. As you told earlier, some bad events in the market or sentiment going down, you can buy it. There is a very high potential. You may get it at a much lower price. Maybe 5 to 10%, maybe not more than that, because here, Nikunj, it is reflecting different aspects. One is country specific. The opportunity in India for this company to grow its business. Now it is just some 100 plus stores mostly in Western India. So the country is very huge. There's a huge potential. It's a futuristic business, very relevant business, and a most efficiently managed company. So as I told, the super premium promoter, all these things put together, why can't this company go to say 1 lakh crores kind of a sales in the next 4 or 5 years, maybe in 4 years' time? And that time maybe the multiples could come down, the margins could come down, and still it can be a 1 lakh crores market cap in next 4 years' time. So that's what people are betting on, some company, great company and business with a good visibility. So people are ready to pay premium because such kind of businesses are very limited. It's very rare in this country. So that is why this premium. So I don't think somebody really want to make a decent compounding can buy the stocks even today at today's price. Maybe they will waste some time. Time can be, wasted during the process when you buy it at a high price. That's the only difference.
Did you buy it today, Pranunjya? Let me ask you a simple and a straightforward question. If yes, at what price? If not, why not?
To be frank, I bought some shares today, personally, just because of my relationship with Mr. Radhakrishnan, just as a symbol of that, I just bought some shares. I bought 10,000 shares at when it came down after the initial listing.
Okay. Ashwini Khare also joins us, Executive Vice President with ICICI Securities. And Ashwini, as a merchant banker, were you expecting that DMart on day one will clock a market cap of 40,000 crore? And if you were, then clearly merchant bankers sold the stock very cheap.
But I think it's the fundamental of the company which has kind of created that interest amongst the investor community, and we are very happy to be associated with the issue. And we think that we priced it absolutely right, but I think it's the interest of the investor community which has actually come on the fore, and it's because of that the opening has been so strong. So it's an overall interest that we were able to create during the IPO through the road shows, meeting a lot of these investors, both foreign institutional investors and domestic investors. And I think it's a result of all. But ultimately, the interest is there because the company is so sound. The kind of operation that it runs is so profitable, so tightly operated company. The kind of ratios, efficiency that you see is really on the top. So it is a leading player which we were pretty sure that it will get a good response, and I think this kind of response is not a surprise to us.
I would have thought you would have said that the response has surpassed your expectations as well, because many believed on the street that, after the initial pop, the stock would fizzle out, the excitement would fizzle out. Maybe it would settle at between 550 to 580, but it's closed at a whopping premium. And that's my question to you, Purunja. When you're talking about having bought 10,000 shares in the market when the stock came down, do you think between 550 580 is a good zone where one can see value from a long-term perspective if somebody doesn't really want to pick the absolute top, which is where the stock closed?
I think it's very sensible. That's a very good correction people can expect. The way the stock came down immediately after the listing, that could be the bottom for next many years for the stock. That's what I believe. So I told, the huge scalability, you can't underestimate that. The country's economic environment, and the scalability of the business, or when it all get together, why can't it become a very huge company? It can be a $15 billion company by market cap. Maybe the company will be raising funds. Now the promoter stake is very high. They can easily raise 10,000 crores and expand and grow at maybe 5 times the earlier last few years growth rate. So that is where I am talking about the huge scalability. And Mr. Radhakrishnan is the person who knows the market and the market dynamics. And some people were, feeling it was priced low at the IPO. I don't think so. But no, he was aware. Definitely, he would have been aware that he could have been pricing the stock much higher. But as Modi say, "Sabka saath, sabka vikas." He wants everybody to make money. That is what a smart entrepreneur or a people who know the market does.
Well, everyone's made money. Let's be real. Even it was a highly leveraged way in which HNI investors have participated. At 600 plus, I've been told that the calculations indicate that the HNI investor also made money. So Ashwini, what is your sense on what DMart could be by 2020? I mean, when you understand the business model, I'm sure you must have factored in a growth number also for next 2 or 3 years. What could be the best case scenario for DMart's turnover in 3 years?
Sorry, Nikunj, if I can, that's question to me?
That's right, Ashwini.
Yeah. No, so we don't give a forward price or price the issue or price the stock on a forward basis, but we are very confident that if the company continues to operate in the same manner in which it has operated, you see some of the ratios in the last 5 years, a CAGR of 40% plus, both in terms of top line and bottom line. It continues to expand its presence, and as someone on the panel said, they are just on the western and southern part of the country. There is a huge scope for expansion. If they are able to scale it up, I think the growth opportunities are immense. In that case, the stock will be anywhere. I mean, we don't want to put a number, but I think if the operation and the performance of the continues, I think the stock will do very well going forward as well.
Okay, thanks very much, gentlemen, all of you, for taking out the time to speak with us today and help our viewers understand the potential of this big bang issue, which is now entered the secondary market with a bumper listing. Really share your outlook on the same for their benefit. We wrap up the show on that note. From Nikunj and myself, thanks very much for watching this special. In the meantime, we leave our viewers with another expert opinion from Ayaz Motiwal of Nivalis Partners. He's betting on R.K. Damani's business acumen, says the long-term story of DMart remains strong.
The business economics show that they are just not there to, put out, stores and revenue numbers. They're actually a very profitable enterprise, and that is the hope that as Mr. Damani in his earlier avatar, if you will, as a stock market investor, has focused his energies on buying high quality businesses for the long term. So the hope is that that he's also a builder of a high quality business, which is currently apparent, and there's more to come.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.